Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the economy in Russia, and specifically to talk about the problems that Russian businesses are now encountering, receiving money from China and paying money to China. Now, as a result of the sanctions, lots of different financial institutions within China that were previously making payments to and from Russia have been told that if they're found to be dealing with Russian counterparts who are on the sanctions list, then those institutions in China will be hit with the same sanctions. So this is what we call secondary sanctions, because the financial institutions in China aren't actually being sanctioned because they're helping the war effort. That's what's happening in Russia. That's why those Russian businesses have been identified. But in an indirect way, if they're allowing money to be paid to those companies that are helping with the war effort, they're seen as being facilitators. And so they're being hit with these secondary sanction threats. And the Chinese financial institutions are taking these risks very seriously. And as a result, all payments that are being made to and from Russia are now under heavy scrutiny. And it's been reported that there are now some serious delays in terms of those payments going through. We are talking months, and we've now got tens of billions of dollars worth of payments that should have been made to Russia in respect of things like oil and gas exports that are sitting still in the Chinese banks because they're not releasing the money. And this is now causing major problems in Russia. So we'll have a look at a detailed report that says that those payment problems accelerated in August. It's getting worse from Russia's perspective. And these payment issues are adding an extra layer of difficulty for the Russian businesses. Firstly, they were hit with sanctions which restricted which countries they could sell their goods to. So they had to find new buyers in China. But now that they've done that, they're now facing the problem of not actually being paid. So this is becoming a cash crisis in Russia. And there is now a further problem of liquidity because all of the Chinese counterparts have to be paid in Chinese Yuan. They've all refused to take Russian rubles. Nobody wants to do deals in rubles. And Russia is running out of yuan. So we'll have a look into the details of a recent report that says that the yuan crisis has doubled in August. And we'll also talk about some specific examples, problems that are now being encountered by the car manufacturers in China who were previously exporting huge volumes of vehicles to Russia. They've taken up the slack that was left by all of the Western companies when they exited Russia following Russia's invasion of Ukraine. And we'll also have a look at what the impact of the sanctions have been on one of Russia's largest mining businesses. This is a business that is the largest exporter of nickel and palladium globally, who's also encountering problems now as a result of those payment difficulties. And then finally today, I'll wrap up with my summary as to what I think the implications of these payment problems will be for the Russian economy over the course of the next 6 to 12 months. Now, before we go on any further today, I want to talk to you about today's sponsor, Incogni. One of the things that drives me insane is spam marketing, whether it be spam emails or spam text messages, or the very worst of all, spam phone calls, where people phone you up and try to get you to buy things that you've got absolutely no interest in. Now, the reason that you're hit with so much spam these days is because data broking is big business. Data brokers can take your details when you register for a store card or go online and buy things. Your data can be sold onto hundreds of different databases, and those databases are then used to hit you with all of the spam. Now, the great news is that if you find out which databases you're on, you can contact them and ask for your details to be removed. But who's got time to do that? Well, the answer to that question is Incogni. Once you sign up with them, they will contact the data brokers and ask for your data to be removed. And as well as cutting out all of those unsolicited phone calls and messages, it will also protect you from cybercrime and identity theft. And the great news is that Joe Blogs viewers can get a 60% discount on an annual membership by clicking in the link in the description below. Russian companies are facing growing delays and rising costs on payments with trading partners in China, leaving transactions worth tens of billions of yuan in limbo. Over the past few months, Russian companies and officials have highlighted delays in transactions after Chinese banks tightened compliance following Western threats of secondary sanctions for dealing with Russia. Chinese state banks are shutting down transactions with Russia en masse, and billions of yuan worth of payments are being held up. China is Russia's largest trading partner, accounting for a third of Russia's foreign trade in 2023, and supplies items such as vital industrial equipment and consumer goods that help Russia to weather the Western sanctions. It also provides a lucrative market for many Russian exports that China relies on, from oil and gas to agricultural products. In June 2024, the US Treasury threatened banks in China and other countries with secondary sanctions for dealing with Russia. And as a result of this, Chinese banks started to take a very strict stance on transactions. Some Russian businesses have been using chains of intermediaries in third-party countries to handle their transactions and get around the compliance checks run by Chinese banks. However, as a result of this, the cost of processing these transactions has risen by as much as 6%. Russian imports from China fell by more than 1% to $62 billion in the period from January to July 2024 due to payment problems, and Russia's central bank has forecast that the country's total imports from around the world will fall by as much as 3% this year. In a recent statement, the Russian central bank said imports will decrease in 2024 due to the strengthening of sanctions barriers related to payments and logistics. And Kirill Babiev, head of the China Institution at the Russian Academy of Sciences, said until issues with payments are resolved at the state level, we cannot expect a dynamic inflow of investments from China. Large companies in China as well as India are heavily dependent on American and European markets, and they are being told if you continue to work with Russia, we will cut off access to our market and choke off your oxygen supply. So what we're starting to see here is that the threat of secondary sanctions against Chinese banks and financial institutions is now starting to cause major problems for Russia because they're not able to make payments or receive payments. So although they can agree trade deals with their Chinese counterparts, if you're not getting paid, then those deals won't actually happen. And that's obviously a major problem from Russia's point of view. And one of the other consequences of Chinese banks not wanting to do trade with Russia is that Russian companies are now running short of Chinese Yuan to be able to make the payments because, as we've discussed many times before, Chinese counterparts don't want to be paid in rubles. They only want to receive payments and make payments in Chinese Yuan. Tighter US sanctions have curbed the flow of yuan to Russia, forcing local lenders to borrow the currency at a higher rate from the central bank. China became Russia's main trade partner after the Kremlin was severed from Western markets by penalties unleashed in response to the 2022 invasion of Ukraine. Amid Moscow and Beijing's no-limits friendship, around $240 billion worth of imports and exports are now priced almost entirely in yuan. But there's growing evidence Chinese banks are afraid of being penalised for indirectly funding Russia's war machine under the latest expanded US sanctions announced in June. Payment issues were at the top of the agenda when Russian President Vladimir Putin recently met with the Chinese president. As yuan liquidity in Russia dries up, firms are turning more and more to using yuan swaps with the Bank of Russia, operations that were previously viewed as an expensive last resort. The average daily volume of yuan borrowed via the swaps jumped to 20 billion yuan, around $2.8 billion in August, compared with 10 billion yuan in June. Sberbank, Russia's biggest bank, sees no prospect of the situation with yuan liquidity improving dramatically, according to Taras Svortskov, the Interbank senior vice president and head of its financial division. Alex Isakov, a Russian economist, said Russia's yuan money market hasn't recovered, which suggests that Russian banks are struggling to find reliable workarounds. The Bank of Russia is stepping into the gap likely left by China's private bank branches in Russia. Higher yuan-based costs could mean lower trade volumes with China, Russia's main source of imports. If China's exports to Russia, whether direct or transshipped, decline in the second half of the year, Washington will be able to claim a major win in its sanctions war on Russia, and the yuan's ability to serve as an alternative to the dollar will be further in question. As a result of the problems that are being experienced by Chinese banks, there are now shortages of Chinese yuan, and Russian companies are having to do swap deals with the Bank of Russia in order to get that currency. And this chart shows the average volume of those swap deals in each month in 2024. And what you can see from this chart is that in the first 5 months of 2024, the level of swap deals was relatively small, 2.4 billion yuan in January, 3.5 billion in February, 5.2 billion in March. It fell to 1.6 billion in April, 1.7 billion in May. However, in June, which was when the US decided that it was increasing the secondary sanctions and told all of the Chinese banks that they needed to be very careful in terms of who they were dealing with, there was a large jump to 10.3 billion yuan. In July, the figure was 6.5 billion. And in August, the figure skyrocketed to above 20 billion, which is almost the same as the previous 6 months combined. And this really shows the problems that are being experienced right now within Russia. They simply don't have enough currency to be able to make all of their payments. And this chart plots the cost of borrowing Chinese yuan within Russia, dating back to March 24. The yellow line here shows the Russian central bank swap rate, and the black line shows the overnight yuan rate for borrowing in Russia. And what this shows is that over the past 5 months, there's been a significant increase in those costs. At the start of March 24, the swap rate was sitting at 4.2%. However, by the end of August, it was up to 7.3%. And over the same period, the overnight rate has increased from 5.8% to 7.5%. However, you can see that at times of extreme shortages in the currency, there have been some serious spikes. In June, the rate spiked up to 27%, and at the start of August, it rose above 20%. And what these charts highlight is that the shortage of Chinese yuan that's now being experienced in Russia is causing problems for companies that are dealing with Russia, and it's also increasing their costs. Payment issues between Russia and China, caused by US sanctions, pose serious issues for Russian imports of Chinese cars that have supplied the domestic market over the last 2 years, according to the president of the Association of Russian Automobile Dealers, Alexei Podsketoldin, who said the problem was particularly serious for smaller importers who had seen payments bounce. The upshot is fewer exports for China, while Russian importers lose business and possibly face added costs. Even if a Russian bank is in China and it services ruble accounts, transactions with China can no longer be done. It sits in the bank and does not go through to execution. Previously, there were only the big banks, Russian and Chinese, but these were gradually blocked, added to the sanctions list, and everything was pumped over to the second and third-hand banks. Chinese car makers have already seized more than half of Russia's car market since Western competitors pulled out, taking their technology and know-how with them. China's car exports to Russia were up 36% year-on-year in money terms, to 4.86 billion between January and May 2024, according to Chinese customs statistics. The problem is huge. Even our larger domestic producers who buy spare parts, for example, have already faced this problem. And the idea of barter trading, actually swapping equipment for equipment, has now been put forward as a solution. However, this is not practical, as authorities would need to agree on a price for the cars and spare parts as opposed to basic raw materials. The concept of bartering may be possible for commodities such as oil, wheat, sugar and gas, but how do you do it with cars? It's very difficult. It's basically impossible, he said. The Russian business NORNICKEL, which is the world's largest producer of refined nickel and palladium, said difficulties with cross-border payments have contributed to lower profits. The restrictions imposed by the USA in June to stem the support for Moscow's war in Ukraine have put local banks in countries that trade with Russia at a higher risk of so-called secondary penalties, increasingly delaying or disrupting payments to and from places like China and Turkey. That's making it difficult and sometimes impossible to execute transactions, particularly with China, arguably Russia's most important economic partner since the war began. NORNICKEL said that the sanctions have weighed on its earnings, highlighting how the sanctions against the country's economy are hurting its companies. The US Treasury has announced penalties on some of NORNICKEL's servicing units and companies affiliated with the miner, which includes the unit that supplies fuel to the miner on its Taymyr Peninsula, an airline, transportation and IT services providers. The Bystrinsky copper mine, which NORNICKEL started in 2017 with the aim to supply China, has also been sanctioned. It is expected to produce up to 68,000 tonnes of copper in concentrate in 2024. However, interestingly, the mining company itself hasn't been sanctioned by the USA or the European Union. NORNICKEL said first half revenue dropped by 22% from a year earlier to $5.6 billion, with lower metal prices and logistical issues also being an issue. Earnings before interest, taxes, depreciation and amortization fell 30% to $2.35 billion, while free cash flow slumped more than 60% to $525 million. NORNICKEL also noted that net working capital jumped 20% year to date to $3.7 billion, mostly due to an increase in unsold inventories. The company sells more than half of its output in Asia, mostly to China. So what's the summary and conclusion today? Well, I wanted to post this video because I think what's happening with regards to the payments that are due to be made to and from China by Russia is absolutely fascinating, because since the sanctions have been applied against Russia, since its invasion started back in February 2022, we've been talking predominantly about how Russia is going to find new trading partners. And over the last 2.5 years, there has been a pivot by Russia. They've moved away from selling large quantities of commodities directly to its European neighbours, and it's now selling much bigger volumes to China and India. And I think from a big picture perspective, that's quite easy to get your head around. But I think what's more important, and what we've been through in today's video, is actually how do you move the cash from Russia to China and vice versa? How does Russia get paid for all of its exports? And this is an area that the sanctions have really been trying to close in upon, because the sanctions are in place trying to stop things like the export of oil. There's a cap in place of $60 per barrel that's been applied against Russian oil. However, as I've talked about in many other videos, it's quite difficult to police that cap, because you need everybody to be completely honest. So you need whoever's running the ship to look at all of the documentation and check that all of the sales have been done at no more than $60 per barrel. And there are lots of different ways of trying to get around that by adding on transportation costs and other additional costs that could take the total payment up. So it's quite tricky to be able to spot if Russia is selling above $60, but also there are a lot of unscrupulous ship owners who basically don't bother checking, and they're happy to move the oil at whatever price it's been sold at. So it's quite difficult to police, and obviously from the West point of view, they're now talking about closing all of their waters and arresting those ships, but you have to do that on a case-by-case basis. But what the USA and Europe have tried to do over the course of the last 6 months is really clamp down on payments. And they've targeted the Chinese banks. They've told all of the Chinese financial institutions that if they're caught dealing with sanctions entities in Russia, then they will be hit with sanctions themselves. And as I said right at the start of this video, from China's point of view, dealing with Russia is a big risk, because Russia only accounts for around 2% of all of China's exports. So if they were hit with sanctions and they lost 98% of their business, obviously that's a complete disaster from China's perspective. So that's why China is very worried about these sanctions. They're taking it very seriously. And as we've seen in today's video, what that means now is that the payments are being held up for months and months. We have got tens of billions of dollars of payments that are still sitting in China that haven't gone to Russia. So what that means is that despite the fact that those Russian businesses have managed to find buyers for all of their products, they haven't been paid. And cash is king. You need cash to be able to keep surviving. Obviously, you've got to pay all of your people, you have to cover all of your own costs, and you want to make some profit. So cash flow is a critical part of any business. In fact, that's the reason why most companies get themselves into difficulty. Not because they're not selling enough product, it's usually because they run out of cash. They hit a liquidity crisis. Now, in order to try to get around this, they've tried lots of different ways. They've been using smaller financial institutions. There's even been some talk of bartering, using cryptocurrency, lots of things to try to avoid being caught and getting those payments. But all of those things add additional cost, and they also take time, and they're not a perfect solution. So Russia is really struggling from that side of things. But the other major factor that we've talked about in today's video is that the Chinese companies are not interested in dealing in rubles. They don't want to make payments in rubles, and they don't want to receive payments in rubles. So everything is happening in Chinese Yuan. And what that means is that all of the companies in Russia that are importing things from China need large quantities of yuan to be able to buy those things. And they simply don't have enough in Russia because they're not doing enough business, and the money isn't flowing backwards and forwards. It's all being held up in China. So as a result of all of those factors, those companies are now having to borrow from the Russian central bank. They're borrowing yuan. And as we saw, the price of that has gone up significantly over the last 6 months or so. So once again, we've got lots of additional cost that's being applied against all these Russian businesses. So the sum total of all of these factors is that costs have gone up significantly for Russian trade. Anybody that's dealing with China is now facing a lot more costs than they were this time 2.5 years ago. But also there is now a cash crisis and a liquidity crisis. And we're getting to the point where Russian businesses simply might not be able to have enough Chinese yuan to make those payments. And so we could see a huge reduction in both imports and exports as a result of the sanctions that have now been increased on Russian payments to and from China. So the overall summary of today's video is that the sanctions that have been applied on payments are really starting to hurt Russian businesses. This is affecting the level of trade. It's affecting also their profitability because costs have gone off. And all of this is seriously bad news for Russia and the Russian economy. So hopefully you've enjoyed today's video. You found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end. And here's something to put a smile on your face.